After a banner year for crypto with tailwinds from Washington and Wall Street, selling pressure has recently returned with a vengeance. Bitcoin recently flirted with a bear market. Let's talk more about it with Andy Baehr, CoinDesk Indices Managing Director. He's here with me at the desk. Andy,
yes, no relation to the market, Andy Baehr.
No. Yes, I guess well, Bitcoin, you never know. I mean, but, so what kind of cycle are we in now then? Right. How do we think about that?
After the sort of late August peaks, that kind of represented the maximum positive momentum and vibe coming from the regulatory improvements, the legislative improvements. It was important, it was critical, I think, that Ether participated really strongly and hit its all-time high, which was breaking a 4-year-old record. Bitcoin did too, CoinDesk 20 did too. It was a really broad, exciting rally that was based on the hope for growth and a continued good Bitcoin story. And since then, a lot of liquidity pulled out of the market, sentiment soured a little bit, alts really took it on the chin, and then the government shutdown kind of really brought on this malaise that turned this kind of tenderness of the market into a vulnerability. Then the October 10th episode happened, which was not a great look for the market. It showed some cracks in the armor for how things like perpetuals are dealt with offshore, and that was just a reminder you really have to be careful what kind of instruments are out there trading in that kind of size. So it all kind of culminated, and at the end of last week, I noted that 3 of the big permabulls in Bitcoin adjusted down their price targets. Smart people, and we knew, I felt like, well, that's got to be pretty close to the bottom. And then last night we kind of got this news which might come, to show that segment of time has resolved.
The stuff that you talked about from October 10th, though, that hasn't gone away, right? In other words, part of it is the offshore stuff you were talking about. Part of it has to do with also margin, buying on margin in the market. Has that been did that sort of wash that out of the market? I mean, there's got to still be some.
No, I think, look, you need liquidity and you need leverage in the system. 3/4 of all crypto trading. Crypto can trade 3 times its whole market cap in a month. In August, that great month, we had nearly $10 trillion of trading. 3/4 of it was in derivatives, which implies that there was some leverage there. So just like any other market, interest rates or equities, you need leverage in the system. One of the interesting characteristics of the perpetuals futures market offshore in crypto is that if you get liquidated, there's no stigma attached to it in some of the outlets, right? You post collateral. If you get liquidated, you come back the next day and try again. It's almost more like an option than it is a futures contract. Whereas, here when you're working with an FCM on a regulated futures contract and you don't meet a margin call, we've all seen trading places. It doesn't end well, right? So part of that kind of impunity of liquidation is just a characteristic of the crypto markets. The centralization of liquidity on each exchange rather than having it work through clearing houses and things like that show kind of an early market that's still kind of owner operated. Those things will evolve over time. But there was a little bit of a hangover from that, and did anybody get damaged? Who's my counterparty going to be? Let's wait until the dust clears and see what happens. And then we were in this liquidity environment that was so tight that the Fed had to come in and do some unscheduled repo activity to help restore the bank's balance sheets. So it was all in all a liquidity evacuating time during October and November, and hopefully now with the government back open, things can stabilize. Fiscal flows can resume, and we can sort of take a deep breath, look at what happened, but move forward.
One of the other phenomenon we've been watching closely is that of crypto treasury companies putting various types of crypto on their balance sheet. And not surprisingly, when the prices go down, it's not great for those companies. So does that mean if you think Bitcoin and crypto generally has bottomed, does that mean those companies have too?
I think that digital asset treasuries have a unique opportunity to add value for investors in that if you look at asset management wrapped products, you have a limited number of tools in the toolbox, right? You can do things, you can write options, you can stake your tokens, you find ways to get yield, you can manage portfolios actively. There's a ton of things you can do. But you can't do all the things that a corporate treasurer can do.
Like what?
Like lend, like actually have lending, like have bilateral agreements, like have term agreements that wouldn't be allowed in a vehicle that needs daily liquidity, right, which ETFs do. So it kind of enters into this new space where treasurers can be clever. When MicroStrategy/Strategy issued converts and then issued preferred shares as a way of kind of making their balance sheet take advantage of Bitcoin's volatility properties, that's pretty interesting. So I think there's a way to bring new types of financial engineering skill that can add value. Now, that may cause people to want to rush into certain DATs, certain DATs, and that can push prices above, their sort of book value. And when liquidity comes out, things will fall below the book value, known as MNAV in the new parlance. But I think that over time, that kind of structure will mature, and you'll see real skill, you'll see fundamentals attached to certain DATs, not just kind of religious following of them.
Right.
And I think it'll evolve over time. And the ones that trade below NAV will trade below NAV like closed-end funds do, and that's a market. So interestingly, a lot of crypto is being held by them, as it is by ETFs and governments and other things. So that those digital assets tend to be parked. But I think it's a space that is not going to go away, and I look forward to seeing what comes next.